optionality, so having various options of investments they could invest in, and options that didn't give as high a risk as our traditional product. And so we became an impact investing platform. So we sort of evolved a bit. So an impact investing platform that would allow investors to invest in our partnered businesses, businesses that we've partnered with, where we create an attractive investment opportunity from that business or their clients. And as a result, we see a lot more uptake from young professionals having the opportunity to invest. So typically, traditional institutions have a minimum investment ticket. Because we're driven by technology, we allow our investors today to invest as little as 5,000 naira. Of course, as we're a fintech company that's focused on investments, we don't have maximum investment.
Fantastic. Thank you, Chiwete. I like the point you mentioned about your company is surrounded with impact investing. And I think that's very key for a lot of people who want to invest their money or start a business, as the gentleman said, and they don't know where to go. So you're actually essentially changing people's lives. And a key thing that Chiwete said is that you can actually invest with as little as 5,000 naira. I think a lot of people feel I need to have so much money before I can start investing. But you can actually start with as little as 5,000 naira and 10,000 naira to generate wealth. So my next question is to Tommy Balogun. As you know, a lot of colleagues and friends we've been discussing, and they feel the opportunities are just not there. And even if they're there, there's a dearth in financial literacy. People don't understand. They're seeking knowledge. They're going on Instagram, but it's just not there. You, however, came up with the solution, and you've bridged the gap to when it comes to financial education. So can you tell us more about the essence and the purpose behind starting the Investment Club and Vestra Company? And what results have you seen from millennial interaction?
All right, good afternoon again, everyone. Yes, absolutely. When, I think it was in 2013, I just finished my MBA, and then my friends and I, we just thought, you know what, we need to get better with our money. Because prior to the MBA, we worked, and we just didn't have any savings or anything tangible to show for it. So for us, it was time to get better. So we were looking forward to getting good jobs after the MBA, and we wanted to start doing better with money. And we thought all we needed to do was put money together, really. So for us, it was a case of how do we, pull our funds together so that we could invest in more opportunities that we probably would not be able to do by ourselves, share the risk and share the rewards as well. So we came together and said, let's start an investment club at the time. So for us, it was just a case of taking advantage of the power of money. And then we started to learn that, look, we didn't know jack about investing. First of all, we thought we would take a dabble into the stock market, right? And then we said, okay, let's just pick one or two stocks. And that was absolutely the wrong thing to do because one, we didn't do any analysis, we didn't do any fundamental research, nothing. It was just the case of, who do you think we should invest in? And we just picked one or two companies and we just started investing. So it was a wake-up call when we started to lose money, right? We tried different things. We invested in a small business. We dabbled in a couple of things. And for me, it was, God, we really need to learn what investing is. Like, we need to go back to the drawing board and really learn. And then it was really tough to find books about investing in Nigeria. So you wouldn't find any book about investing in the stock market in Nigeria. There's so much about investing in the US stock market, investing in small businesses in Silicon Valley. But there was really not a lot of information because a lot of the people that we have that understand this market just have the knowledge in their heads. So we would go into different companies, look for experts and say, please, can you teach us how to invest in the money market? Then we didn't have all of the apps we have then, and most of my friends didn't know how to invest in treasury bills. In fact, I would walk into some banks, and they would tell me that you're too young to invest in treasury bill, or you don't have enough money, whereas that was the opposite was the case at the time, right? So I started to learn a lot about investing, but a lot of it came from practical advice from people in that industry. It also came from us making our own mistakes as well. So when I started to blog about it, on my site, people started asking me questions, and I thought, you know what, I could start a community around this. And I started to share within my investment club, and we started to see that there's so many people that are in the same position that I was. So it was a case of me sharing my knowledge, bringing other experts that I had met to come and share the knowledge. And yes, there's still a depth of knowledge because a lot of people still carry knowledge in their heads, especially people that have worked in this industry for 20, 30 years. We're really trying to get them to, document as much as possible. But yeah, you're right. There's still a huge gap, but it's definitely a lot better than when we started.
So Tommy pretty much was saying that when she started the investment club, she herself, like many of us here, didn't actually know what they were doing. It was almost like trial and error. So I think the message behind this is don't be afraid. She went to people, she went to experts, she was asking questions. And I think that's where there's a huge gap with a lot of young people. We fail to ask questions out of fear of looking inadequate. But you find that the most successful people actually ask as many questions as possible. Now, Tommy has started her company and she's thriving. So, in solution, ask questions. I'll throw this question to everyone. So, as you know, you've mentioned traditional investment opportunities like your treasury bills, your money market fund, the equities, euro bonds. But do you feel that there should be something more structured for millennials? So, for instance, two people in the audience mentioned real estate. Someone's mentioned starting their business. Do you think that there should be something a bit more structured for millennials that is not as technical but it's easy to understand?
Well, it depends on how you define structure, because I think, first of all, we need to understand who millennials are. Very different from who we call the baby boomers, our parents. So, our parents looked forward to having a job, and, just working in that same job for 10, 20, 30 years, looking forward to retirement, earning pension, and they're fine, right? But these days, a lot of young people want to step out of 9 to 5. We want to travel, we want to freelance. Times have changed, there's social media, there's so much happening. So it's very different times. Like, my mom still calls me and says, when are you going to get a job? I'm like, well, I don't need a job. I don't think any job can pay me right now or even give me the satisfaction that I have from doing what I do. So they still have that mentality, right? So in terms of structuring for millennials, it's really understanding how they think, right? They're not going to stick around, probably for too long in some certain options. They want the best returns. They're willing to take more risk, probably more than our parents were. They also want to travel and live their lives. So they're really more about living in the present. When you're talking about pension, that's like 30, 40 years, like what happens to now. So it's really understanding how they think and how they socialize right now. Social media, there's a lot of influence on social media, and structuring things around that. So what if you had a travel fund? What if you had a fund around, freelancing or stepping out of 9 to 5 for a while to be flexible around the kind of job options you can try out, different things like that. So I think I'll stop there for now, so the others too.
So Chiweze, what do you think? What are your thoughts?
So I think ultimately, I think about it in two ways. If you decide to invest, you need to know why you're investing. What is the purpose of the investment you're making? And how much risk are you looking to take? So I agree with the points Tommy has made. And the reasoning would be, and I'll give an example. Next year, some people here might be paying rent, and you say you have your rent money today. Say that rent money costs, 250,000 naira a year, right? There are 3 types of investments you can possibly make. An investment that will pay you your principal and interest once the investment period is over. Those that will give you a monthly interest and pay you your investment at the end. And those that will pay you your principal and your interest monthly. If you're looking to invest your rent money for next year, you don't want to invest in something that's too risky, right? And the investment you make should ideally pay you at the end of the tenor, your principal and your interest, or pay you monthly your interest and your principal at the end, so that you don't have the opportunity of mismanaging that money or spending it. So what you're investing towards is quite important. I think investing for investing's sake is good, but it is important to know why you're making that investment, because that determines what kind of investments you make and what the risk levels are that you'd be interested in making when you're taking that investment. So just an example on rent.
Thank you, Chiweze. So before I go on to Ink, I think in terms of structured products for millennials, so two people said real estate, but as you know, most of you want to leave your parents' houses, you're looking for rent money. So the benefits of even fintech knowledge is what Chiweze does is that you can get a loan to pay your rent. So there are actually opportunities out there. It's just a matter of asking questions. And if you can't find those opportunities, you create that opportunity. Go to a finance house and create the opportunity and ask questions. But moving on to Nkechi Eze, who is the founder of Ashobi Bella and former Bella Nigeria's weddings editor. So Nkechi, as you know, many of you might know her, I'd like to call a social media influencer. Excuse you, pardon everyone. So Nkechi, as you know, I like to call a social media influencer. So Nkechi, as a Pan-African influencer, do you feel that there are investment opportunities available for people who are into social media influencing? Because so many people want to do it. Either they can't budget for it, they don't know what to do. Can you give us a bit of guidance on the investment opportunities that are available for people within your field?
Hello, everyone. Thank you for your patience. I'm very happy to be here today. I'll start off with that. Well, I think that there are real ones and there are fake ones getting into, the trend of social media. For example, some Nigerians think investing is investing in MLMs or things like, Swiss gold and, things like MMM. So we also have to have education because you have a lot of social media pages that advertise quick money, and we have to really be critical of what we see. Sometimes we have people wanting to advertise with us, and we have to say no because, us young people, we can be attracted to fast money. So I do have to cover that side of the fake investments. When it comes to, I guess, more interesting ones that are even led by social media, you have, for example, those ones where you're investing in a farm and they're giving short-term results over 3 months and 6 months. I don't know if I should name some of them. Yeah, maybe not. Yeah, but you're investing in a farm, so short-term returns. So people like that, and a lot of them promise that they are insured. But also there was a bit of controversy with one of them recently about the products and the pig farming and all that. So there's a lot out there, but I would say that it's hard for people to digest this information. It does seem attractive because of low capital, short, fast returns, but I think that people need to do research more.
Thank you. That's very valid, Nkechi. So I like the point Ink spoke about when she said that there are all types of investment opportunities beyond your traditional means. So she talked about agriculture investing. And I'm sure some of you are not new to this. You probably invested your money in like agric and things like that. It's not necessarily that it's a bad thing, but I think it's about looking for the opportunities where there's regulation. I think that's very important. So like what Ink said about instant gratification by millennials, you also need to do your due diligence. So, and I'll throw this question to Tomi Balogun. Do you think that regulated investment houses and asset management companies should actually provide such diverse investment opportunities to prevent fraudulent means like what happened with MMM and the likes?
Well, they should, but I'm not sure they can. Because within the regulatory context, there are restrictions to what they can do and what they can offer. Really, ideally, anyone soliciting for funds in this market should be affiliated to SEC. SEC is the Security Exchange Commission. It requires that you're registered with SEC in some sort of way, which is why a lot of the agro platforms work with insurance companies, right? They go there to get some sort of insurance. But that said, right, one still needs to be very careful. I've seen my share of all kinds of investment opportunities in this market. And it's funny because when we started investing, we didn't have all of these platforms. We had to stick to the traditional options. And I think because of the influx of all of these platforms, people just believe that if you're not offering a return that is higher than normal, then it's not something I want to put my money in. But the truth is, investing is something that has to be a lifestyle, something you do over a period of time. You need to understand that it takes a while to build this thing up over time, and you have to continue to save. I mean, when they talk about compound interest, that's the essence of compound interest. And you also need to understand how the economy affects your investment decisions. So the fact that the economy is doing this with this particular, I mean, when treasury bills were about 18 to 25%, everybody moved there, and now it's down to 2.5 to 3%, everybody's in the stock market. And then people don't know how to navigate the stock market, and everybody's moving to the agro platforms. There are some really credible agricultural platforms, but not all of them are, right? We do a lot of due diligence in our investment club, and it will shock you that some of them do not even have active insurance policies. You go to the website, it's there, we're insured, but if you reach out to the insurance company, they'll tell you it's not active anymore. So you're really taking a huge risk, right? So a lot of these things, you need to step out and find out information yourself. I understand that we don't have a lot of information shared in public in Nigeria. Sometimes you really have to dig deep to understand some things, but you need to also ask around. Sometimes this information is staring you in the face. Sometimes Google and find out somebody may have shared an experience and say, this is a really bad platform, don't go near it, or something. So you always need to take that step to find out what you're investing in. And one of the things I always teach is there has to be an approach to investing. You have to think in terms of portfolio. So you want to invest in multiple investment options, right? Of course, it starts with your goal, understanding what your goal is, and then knowing what your risk appetite is and what your financial budget is, and then based on that, making a decision to invest in safe options, and I call them growth options. So you don't have to put all of your money in the risky options, right? There's a balanced approach to it. So you can still find some safe investment options to put some of your money, and then also try to take some risk, because you do have to grow your investment portfolio over time. So that way, even if you do lose money, yes, because you can lose money with credible platforms, you can lose money in the stock market, you can lose money by investing in a small business, you can lose money if you take some risk. You still have a balanced portfolio that you can, fall back on. So I think that's the right approach to investing.
Thank you, Tomi. That was very valid. So, Chimisi, this question is to you. So, many millennials want to start their own business. They're more likely to quit their 9-to-5 jobs because we're just passionate people, we're dynamic, we're very entrepreneurial by heart. So one would think that there would be more loans accessible to young people, and I know that's why you started Fins for impact investing to close that gap. However, a challenge is risk assessment. There's no risk assessment framework, even from a federal and a national level, not to even speak of Fin technologies. So how has Fins been able to close that gap to provide options to people that are credible? My opinion is that to be able to assess credits, you need to actually give out loans to people, because it comes back full circle. The more that you give out loans, you see the credible investors over time, and you see the people who are default. So then you then build a credit framework, and that's what we need to do. So tell us about your experiences from Fins.
It's a really, really good question. When we launched in 2018, I'll just try and give people context. The idea was that individuals borrow, and investors could invest in the borrowings of those individuals. They were unsecured loans, meaning that a borrower was taking a loan but wasn't actually providing collateral for that loan. So there was an assessment, some engine that would do an analysis on that borrower. We did that for 1 year, and we took a step back and realized a few things. One was that the idea that investors wanted to earn returns, high returns, was true. They want options, but they wanted options that could provide them some level of reduced risk. And so the first year, we had defaults, which is normal in lending. Our default sat today on that particular product about 7%, right? The market does about 30% for context. We sat about 7%, but that 7% was still high for investors. So what did we do? We decided that rather than go to the customer directly, we would leverage businesses whose business have an attractive investment opportunity so that investors can invest in that opportunity, or allow the clients of those businesses to be able to borrow or access a loan via the business to us. I don't know if that was clear. I'll take that again. So basically, rather than an individual coming to Fins today, that individual would go through one of our partnered businesses, and through that business, they'll be able to access a loan from Fins. Okay? And by doing that, we've reduced the risk of investment as a result. And so I think creating structures that allow businesses like ours to focus more on the collection, on being able to retrieve capital for the investors, is more of our play today than actually looking at building an algorithm or an assessment to assess these borrowers. Ultimately, this is what would happen. Because our borrowing comes from rent, to agriculture, to power, to agency banking, to various products, we would step back and look at all the entirety of borrowing that has happened from these different sectors and be able to build an algorithm that would be more sustaining in predicting whether or not a borrower can pay back. And in essence, not do that without having to invest or spend as much capital. And so that's how we think about it. So today, if a millennial wanted to take a loan from Fint, you wouldn't be able to come directly, but if you're a client of any of our partners, you most likely be able to access a loan.
So what advice would you give to millennials to sort of develop a credit-worthiness self? Would you say borrow money, but don't borrow more than you can afford to give back? How can they generate that credit-worthiness?
So I think the first thing really is the day you take money from someone, pay back. You know, I don't want to make this bigger than it is. I think if you take a loan, whether it's from a friend or from a platform, make sure you pay back. And I'll explain why. Today, you might not get caught. But in a year's time or 2 years' time, that might not be the case. And what would that do? That would impede on your opportunity to access a loan in the long term. So in the short term, yes, you're making gains. You've gotten a loan from X and Y and Z platform. But in a year's time, when you want to pay your rent and they ask you to bring your credit score, or you want to get a car and you're asked to bring your credit score and your credit score is in shambles, then you start to see the necessity to pay back. So I think it's really important. I think, because I'm a millennial as well, I think we typically have issues around when someone lends us money, the person is trusting and relying on your integrity to pay back. So it is important that you pay back.
Fantastic, thank you. So my next question is to Nkechi. So many people want to do social media influencing, they plan for it, and you can probably speak to this best, but I'm assuming that the cost of being a social media influencer is low because you're just about content generation, content that is valuable, content that is factual, content that is informative. But, however, the benefits of being a social media influencer is that you probably make money from just advertising something, whether it's a company's event, you're making money. Money that is being made. How would you advise a millennial who wants to become an influencer? How would you advise that they manage that money? What personal finance would you give them?
Well, for me, I think of social media business in majorly two ways. So except you're an employee, you can maybe own a content page. So it could be something around a general interest like tech or video games, or like we do African fashion or weddings or gossip. And that way you're providing a service. So you're providing the content that people like. So you're bringing in an audience that likes that particular thing, and then at the same time you're saying, hey, advertisers, you can use this as a billboard to reach people. And then as an influencer, it's about, you know, making yourself look good, making the people's products look good, putting a personable twist on marketing. Aside from your camera and basic things that you only need to buy 2 to 3 years, every 2 to 3 years, the costs are relatively low. You can leverage on relationships to get free makeup, free clothes, you know, and you just tag them. That's one thing. But I would advise that so in the social media business side, I would advise that you treat your business like a business. Now, this is easier said than done, and also there are different ways to do it. So at first, when you start, maybe don't do too much. Maybe just register the company name and the trademark, or maybe don't open a business account. The reason I'm saying that, not for anything illegal, because law was put in place that, you know, gave companies that make under 25 million a relief, and you don't have, before we had to pay 30% of our income tax, of our profits every year, sorry. So imagine, I mean, the banks can afford to do that and still billions in profits, but for a young person, that's a lot of money. So keep an eye out for the news. It was 5% VAT, now it's 7%. 7.5% VAT. How are you adjusting your prices? You know, so think at first, do I want to treat this just as my personal income at first to give me a bit of time to structure, to give me a bit of time to understand things, because I know friends, I know people who they've literally come and shut down their stores, or they've literally closed their corporate accounts until they pay these taxes. So I advise you to be responsible, pay your personal taxes, your state taxes, pay your federal taxes, and try your best. I know it's easier said than done, but just try your best to treat your business like a business. Don't just be dipping. If the piggy bank, is there, you only break it when you want to enter things. So treat it like that. Don't just be dipping your hand inside. Try and put maybe checks and balances to do that. Like maybe get your accounts officer to make the transfers. Maybe don't get a corporate card that you can go to the ATM with. Maybe it's only online. So just try and treat your business like a business, but give yourself time to understand what you're going to as well.
Fantastic. Thank you so much, Nkechi. I think that was so insightful. So many of you who want to enter social media influencing, you want to invest your money, all the things that panelists have said are very practical. So one, do your research, do your due diligence, ask questions, get word of mouth referrals. But even when you get that word of mouth referral, it's about being insightful and getting involved in things that are more factual, as opposed to a sensitization of everyone is doing it, so I must do it. Also know that there are investment opportunities for people. 5,000 naira to invest your money. It is there. It is waiting for you to look out for the opportunity. I'll go now into Q&A, because I'm sure many of you have questions that you'd like to ask the panelists. So please just raise up your hand if there's something you want to ask them. Every question is a valuable question, so don't be afraid. You will learn from it and you'll get something that is advised. So, questions?
Hi, good afternoon. Thank you for your advice so far. So I wanted to ask about investing in startups. I know that that's kind of a wild question to ask, because I kind of assume whenever I hear about startups and stuff like that, those that are really successful, it seems like they go for major rounds of funding. So you hear we raised $2 million for something, and then eventually this company becomes a billion-dollar company. So I was wondering if people with like not very low incomes, just like moderate incomes, are actually able to invest in startups or products that are going to make that much money. And how do you find out about things like this? Because when I read the news, I usually hear about them after they've already raised all the money. You know about that kind of stuff. Is this like an insider thing? Find out about startups and products that are probably going to be very profitable. Thank you.
Would you like to, okay, so Tommy will take the question.
Should I answer now? Okay, so I think a lot of us hear stories from Silicon Valley, and we feel like, look, this thing is like a fairy tale. I want to invest in a company that becomes a billion-dollar company. So this is a very different market, and honestly, that's exactly where I started from when we started the investment club. We wanted to invest in small businesses, startups, because of all the stories we had heard. And we invested in a startup, and we lost all the money. And I thought, okay, hold on. I'm not sure I'm ready. Because if you really look at those markets, they only allow, they call them sophisticated investors, to invest in those kind of startups. In the US, for instance, you probably have to have a net worth of $1 million before you're allowed legally or in terms of regulatory context to invest in those kind of companies, because they believe that at that point you can actually take the risk. Now, even some people have brought up the equity crowdfunding platforms, but we don't see them really taking off like the reward-based crowdfunding. Like if you've heard of Kickstarter or Indiegogo, they are more like reward-based startups where as a startup business you can go and raise funds and then promise people rewards. You promising equity and crowdfunding where people with average income or medium income can contribute, it hasn't really taken off. That's because the regulatory context around it has not been really ironed out. In fact, in Nigeria, it is banned. Right? I think it was SEC actually came out and said that it is not allowed. But that said, most of the startup businesses that I have come in contact with, friends and family, really. So the question is, are you willing to take the risk? Because it is very risky. What if that business goes under? What if that business becomes successful? Fine, but a lot of times the risk is really high. One of the things, value the company, you do not understand what equity share you're actually investing in. So how do I know that 10% of this business is worth 100,000 naira? That business has to be valued at ₦1 million. But you see, that valuation is always the problem, because anyone starting a business will tell you my business is valued at millions of naira. And I'm like, no, your business is not valued this high. And even for me as an investor, I want you to be valued as low as possible so that when another investor comes, my money would have increased. So it's always a tough place to agree valuation, very difficult. And there are like 3 ways of valuing a company: cash-based, discounting cash flow, asset-based, or use the peer-to-peer multiples. That's quite complex. But I found it really tough to agree on valuation. So what we usually do, or what I have done, and what we did in my investment club was we did what we call the convertible, where we would give you a loan, right? And after a number of years, say 2 to 3 years or 4 years, I would come back to see if you had grown as a business. And at that point, sorry, I'm breathless. At that point, I would decide if I want to convert it to equity or take back my money. Now, you would still be paying me back an interest on that loan, right? Just to see how you grow. A minimal rate, just to see that we agree. And then at the end of 4, we did that with an oil palm company in Akwa Ibom, my investment club, because we saw that we couldn't agree on the valuation. And we thought, what, let's do a convertible. We invest this amount of money as a loan. You pay us interest every year. And then at the end of a certain period, we would decide if we want to convert it to equity, if we could agree on the valuation at that point, or it will continue to be a debt, or you pay me back, right? Those are some of the flexible ways you can probably structure some of these transactions. But then there are networks. There's the Lagos Angel Network, the Rise Network, where startups go to pitch. But trust me, valuation is always a problem, right? Valuation is always a problem. Even if you find someone willing to invest in you, they might just, cheat you. Someone might say, I'll give you $50,000 for 10% of your company. What if that business become $1 billion or something? That's, so it's always tough to do that. So that's been my approach, really.
Fantastic. I hope that answers your question. Yeah. And one last thing is that you can also ask the people who have invested in companies what they did, and they'll simply tell you. There's also Y Combinator Startup School that is global. So that's the #1 investment platform that you can actually go and do research on. Okay, any more questions? Okay, there's a gentleman over there. Two gentlemen over there.
Good afternoon. I would like to find out whether your companies are regulated, the investment club and also FINT.
Good question. So currently we operate under a lending license, the state lending license. We're also in view towards working a license that would make us regulated by the CBN before the end of the year.
Okay, so the Green Investment Club works under the company, the Vestra company, which is registered as a limited liability company. We're also registered as a cooperative, so that multi-purpose society where members can come together. But we also work with SEC-affiliated partners for most of all our investments. So we work with Coronation Securities, Coronation Merchant Bank, AXA Mansat. So I only work with people that are regulated, right? And that's the framework in which we work with.
Hello, everyone. My name is Donald. People could invest in life. You mentioned something like livestock, piggery, and things like that. I've seen a lot of platforms like that on Instagram, and I'll be like, I really wish to do things like this, just to my office work, like a side business, like a side hustle. But at the same time, this is Lagos, this is Nigeria. Anything can come up to you on Instagram. You're not sure, you don't know. So let me just give you a scenario. So I DM'd one of them and said, okay, fine, how much does your investment cost and stuff like that? And he told me, and I was like, these pigs that you're talking about, this livestock, can I, as an investor, can I come and see the farm? Can I see these places where it's just dicey with his responses? How do we know these people? How do we know the real ones from the fake ones? Because of things like this, I just had to leave my money where it is. What to do with it? I actually want to do something to support my work money. Do you understand? So how do we know these people? How do we know the real guys from the... There's something like going to confirm from insurance companies to know if these guys are insured. Do we just walk up to them and ask, can they post their insurance policy slip or something? And you know, which one of them is real.